John Lovallo, UBS homebuilders and building products analyst, joins us now. He's bullish on most of the home builders. What's the weakness been about? Is it higher rates?
Hey, Sarah, thanks so much for having me. It's been a confluence of a couple factors. And one, I would tell you, look, we'll still have our 2025 outlook to come out. But as we stand today, we're still bullish. Yeah, rates, I think, Trump coming into the presidency, the prospect of higher interest rates has clearly spooked some folks. There's been a little bit of inventory build in certain markets, which has become a headwind. We've even heard that valuation is too high. And dovetailing off of your past segment, when you're looking at stocks that are trading at 9 times earnings on 25, it's hard to make that case in our view.
But you are making that case, right?
No, we're making the case they're cheap, yeah.
Yeah, so right. So why do you think that they're still cheap? Because they've had a good run.
They've had a good run, but earnings have gone up, and it has been very little to do with multiple expansion. In fact, multiples have compressed. We think that 9 times earnings, even relative to history, where the stocks have traded 11 to 12, is punitive. And then on top of that, the business models have changed so dramatically that we've argued unsuccessfully so far, but these stocks do deserve a valuation re-rate.
What's going to happen on pricing? Because that was a big election issue. It's a big inflation issue. And it's been all about low inventory, right?
Yeah, inventory is still low. We're at 1.68 million units of single-family units in inventory across the country. The historical average is 2.35, so we're a full standard deviation below. However, to your point, there are pockets of Florida that are higher in inventory, pockets of Texas where it's building. So what does this all mean for pricing? Well, it depends on what rates do, right? If rates kind of stay where they are, the home builders are going to do very well. They will attract buyers with incentives, so they'll buy down mortgage rates, but that's a competitive advantage that the smaller peers do not have, and certainly the existing home market doesn't have.
We did get a couple of downgrades of Toll and Horton on Friday from one of your peers on the street. Yeah. One of the arguments was rates, but the other was that the percentage of the workforce in this industry that is immigrant is at a 20-year high. How much are you watching sort of immigration reform?
Look, I have full respect for all my competitors. I think that's a valid argument that if immigration policy changes, that could be a headwind. However, our estimates would suggest we're still looking at 2 to 3 million units of pent-up demand in the U.S. And if you think about how underbuilt we are going back to the global financial crisis, I mean, you can come up with numbers that are well in excess of that. So even with immigration possibly becoming a headwind, there's still a lot of room out there, a lot of demand out there.
All right, John. Well, we appreciate you joining us with the bullish view. John Lovallo.